Rahim. In the previous class, we discussed about international money market and international bond market. Sorry, international credit market and international bond market. Then after international credit market, then we discussed about syndicate loans. Today we are going to discuss the last topic of this chapter, that is international equity market. Equity is basically used for shares, ownership in securities, in companies. So now, in addition to issuing stocks locally, MNCs can also obtain funds by issuing stocks in international markets. Just like multinational companies, like these multinational companies, they can issue stock just like bonds, that they can issue bonds in international market. They can also issue shares in international markets. Let's suppose this is a country and MNC, this is that MNC. So previously, before globalization, this was the rule that this company was only able to issue shares inside the boundaries of this country. But with globalization after 1990s, now companies can issue stock inside their own country, as well as they can issue shares outside their country. So this makes a new concept that was called international equity market. In bond market, they were able to issue bonds internationally, but here we are talking about international equity market. So in international equity market, companies or multinational companies, they can issue shares not only in the local market, but they can also issue shares in other markets. Suppose there is a Chinese company and that Chinese company is issuing shares in the US market, or they are issuing shares in the UK market, or they are issuing shares in the European market, Euro market. So this makes that one company can issue shares outside the home country. So this issuing, now it becomes part of international equity market. The whole world becomes a market for multinational companies for raising funds through issuing shares. So here he's telling you about this thing, that in addition to issuing stock locally, MNCs can also obtain funds by issuing stocks in international markets. This will enhance the firm's image, and they will issue shares outside their home market. So this thing will enhance their image and name recognition. It will be recognized in different other countries and diversify the shareholder base. Now keep in mind one thing. Previously, this company which was in China, the shareholders belongs to China only, because Chinese people, they purchased shares of this company. But when they issue shares in US market, in UK market, in Euro market, so the shareholders base, it will become what? Diverse. So it will diversify the shareholders base. Now shareholders belongs to Euro, the US people, the UK people, and the European people. So all these people will be shareholders of this company. So shareholders base, it will be diversified. The stock may also be more easily digested. Digested here doesn't mean that eating and it will be digested. No, here digestion means that suppose if you want to issue 2 million shares in China, so it will be difficult because of the limited number of people. But if you will issue these 2 million shares combinedly in US market, in UK market, in Euro market, so it will be easily sold out. It will be easily digested in these 4 markets combined. So what will be the benefit of this? One, the company's image will be built, the companies will be recognized all over the world, the shareholders base will be diversified, and the shares will be more easily digested. Stock issued in the US by non-US firms or governments are called Yankee stock offerings. Here he is talking about a point, and the point is, suppose this is US market. A company is coming from outside USA. Suppose they are coming from China and they are issuing shares in US market. So these shares will be called Yankee stock offerings. Any non-US firm, when they will issue shares in the US market, that offering will be called Yankee stock offerings. Market characteristics are important too. When you will issue shares, when companies, when multinationals, they will issue shares. So market characteristics are very important for the issue of shares. Stock markets may differ in size. In different countries, the size of the stock market, it is different. Trading activity level, it is different in different stock exchanges, in different stock markets. The trading activity level, the trade, the buying and selling activity, it is different in different market. Regulatory requirements, the laws, rules and regulations from government side, it is different in different stock markets. Taxation rates, the taxation rates in different countries, it is different. And proportion of individual versus institutional share ownership. In some stock markets, individual share ownership, it is more, and in some stock markets, institutional share ownership, it is more. So stock markets differs in all these areas. Different stock markets, their size is different, their trading activity level is different, their regulatory requirements are different. their taxation rate is different, and proportion of individual versus institutional ownership, it is also different. So all these factors, they are affecting the issuing of shares by multinational companies. Size is big, shares will be easily digested. Trading activity level is high, so it will be better for the multinationals. Regulatory requirements are strict, so it is not a good point. Taxation rate is low. So majority of multinational companies, they will move towards those areas in which the taxation rate is low. And proportion of individual versus institutional share ownership. Those markets in which there are institutional share ownership, so that market will be more attractive because institutions, they have a huge sum of money as compared to the individual share ownership. So all these factors, they are affecting the issue of shares in these markets. So today we discussed about international equity market, that multinational companies, they can issue shares not only in local market, but nowadays because of globalization, they can issue shares in the international markets. Now, what will be the benefit of this thing? What will be the benefit of issuing shares in the international market? The firm's image will be built, the firm name will be recognized, and it will diversify the shareholders base. Then the next thing is that stocks may also be more easily digested. Then we discussed about that stock issued in US by non-US firms or governments are called Yankee stock offering. When a non-US firm, they are offering shares in the US stock market, so we call it Yankee stock offerings. Then the market characteristics are also important in issuing shares. And we discussed that different stock markets, they differ in size, they differ in trading activity level, they differ in regulatory requirements, they differ in taxation rate and proportion of individual versus institutional share ownership. So this is the end of this chapter, and we are going to start another chapter. And this is the last chapter of our course contents. Chapter name is Economic Development. Now, first of all, what is economic development? So some people think that increase in national income is economic development. Some people think that increase in per capita income. You know about per capita income? Income of each individual, you can see, or the total income of the people of a country divided by number of, you can say divided by the total population. So we will get per capita. So increase in per capita income up to 1990s, it was associated with these two in 1990s. Up to 1990s, people, they were thinking, or economists, they were linking economic development with these 2 points, that increase in national income and increase in per capita income. Later, it was rejected and was considered wrong that increase in national income and per capita income is not economic development. But later on, this concept was changed, and they think that increase in national income and per capita income is not economic development. It was believed that economic development is the development of infrastructure of a state. Infrastructure means development of roads, buildings, dams, different projects, etc. Standards of living. The standard of living of people, the improvement in the standard of living, it was considered economic development. Employment, that people, they got what? Employment, jobs, and equal distribution of wealth. And there will be equal distribution of wealth. So we call that part that it is economically developed. So it was believed that economic development is the development of, first thing, infrastructure of a state. The second thing, standards of living, improvement in the standards of living, employment rate, equal distribution of wealth. So these things were considered the major factors in the economic development of a country or an area. Then, in modern world, economic development means the development of your mind, development of the mind of the people, development of the attitudes of the people, and construction of the people, and the people, the development of the people. So we call it what? Economic development. So it is the modern view that economic development is concerned with the development of the mind of the people, development of the attitude of people, and development of, you can say, construction of the people. This is the modern view of economic development. The second thing is economic growth. Economic growth means it is a concept which is concerned with the continuous increase in production. There is increase in production, increase in the production of services, manufacturing, increase in manufacturing, agriculture, textile, and industries gradually is known as economic growth. So, continuous increase in production, services, manufacturing, agriculture, textile, industries, all these things, continuous increase in these things gradually, continuously, is known as economic growth. So economic growth is concerned with production, services, manufacturing, agriculture, increase in manufacturing, increase in agricultural products, increase in textile. If you will not write industries, because all these things, these are coming in industries. Gradually is known as economic growth. After the economic growth, if there is growth in the economy, the objective of economic development is achieved. This thing will be achieved if there is economic growth. Economic growth is a long-term process. It is not a short-term process, it is a long-term process. There are various stages of economic development, 3 stages of economic development. The first stage is preparatory stage. We are going to prepare for the economic development. When the economy decides to improve, that is, change positively people's mind, the mind of the people, it is changing. Establishment of financial institutions. New financial institutions are established. Political planning. There is political planning, there is infrastructural planning, technological changes planning, there is planning regarding changes in the technology, a very active taxation system, development of the taxation system of a country, planning regarding that taxation system and implementing them, and implementation of all these plans. It is very time consuming stage. It is not a 1 day or 1 year process. It took time. It took decades. It takes much time, maybe decades. So in this stage, financial institutions are established, political planning, infrastructural planning, technological changes planning, a very active taxation system regarding planning regarding the taxation system of a country, and then implementing all these things: the political planning implementation, infrastructural planning implementation, and technological changes planning and its implementation, the active taxation system and its development of an active taxation system and its implementation. So all these things, if you want to prepare, if you want to be economically developed state, so you will plan regarding all these things. You will develop financial institutions, you will make plans regarding your political, there will be political planning, infrastructural planning, technological changes planning, taxation system planning, and implementation of all these plans. Not just making the plans, implementing all these plans. The next stage is take-off period. It is a crucial stage where you form the economy. You are going to develop the economy. It is the practical implementation of all plans and economy for transferring economy from traditional to the modern. So here in this stage, we are implementing all the plans to transform economy. Just a minute. To transform the economy from traditional to the modern. So here the plans which are made, now we are going to implement all these plans. It also takes much longer time because in the implementation of all these things, it will take too much time. Then the last stage of the economic development is period of self-sustained growth. It is the developed stage. Here, economy is in the stage of developed economy. We have to sustain it forever. All the companies, all the developed companies, they are trying to sustain this developed phase of the economy forever. So it is the developed stage. Here economy is in the stage of developed economy, and all the countries, developed countries, they are trying to sustain this stage forever. Determinants are features of economic growth. So following are the features of economic growth. You need capital, you need technology, you need education, you need national resources, rich national resources, and infrastructure. So on the base of these things, we can determine the stage of an economy. So determinants are features of economic growth. These are these 5 determinants. The first one is capital. If you have capital, you have technology, you have education, you have national resources, and you have infrastructure. So inshallah, we will discuss this trade cycle in the next class. And then maybe in the next class, not in the next class, maybe it will take 2 classes to finish the course. So today we discussed about international equity market, that what is international equity market. Multinational companies nowadays, they can issue shares internationally. They can raise funds by issuing shares in the international market. So we call it international equity market. There are some advantages of this, that one thing, shareholder base will be diverse, then shares will be easily digested, companies' goodwill will increase, and these things. Then we discussed that if a non-US firm is issuing shares in the US stock market, we call it Yankee stock offerings. Then after that, we discussed about the factors which are affecting the issue of shares, that size of the market, trading activity level, and different other factors, they are affecting the issue of shares. Then we discussed about the definition of economic development. Previously, people, they were thinking that increase in national income and increase in per capita income, it is economic development. But after 1990s, economists, they rejected this definition, and they connect economic development with the development of infrastructure, with the development of the standard of living, the employment opportunities, equal distribution of wealth, and these things. Then there is also a modern view about economic development, and according to modern view, the development of mind, the development of attitude, and construction of the people, making the people, building the people. This is the modern view of economic development. Then we discussed about economic growth, that economic growth is concerned with increase in production, services, manufacturing, agriculture, textile, all these things. the development of all these things, it is called economic growth. Then we discussed about the stages of economic development: preparatory stage, takeoff stage, and period of self-sustained growth. Inshallah, in the next class, we will discuss about trade cycle, and we will discuss about economic instability. That what is economic instability. Have a good time. Assalamu alaikum.